Good afternoon and welcome, everyone. Thank you for joining us today for our webinar. We are waiting for a few more folks to join us, and we will be back to get started shortly. So we appreciate your patience. We'll be back in a moment to get things kicked off. All right, good afternoon and welcome, everyone. My name is Meg Beyer. I am part of the Managed Care Technical Assistance MCTAC team, and I am thrilled to be joined by our two wonderful presenters today, Fern and Ro, on our Finance and Billing webinar that's part of our Business and Billing Best Practices series that's brought to you by MCTAC and CTAC. Before we get started today, I just wanted to run through a few logistics, and then we will dive right in. So just as we've done in the past for these webinars, we will be collecting questions at the end. So what we're asking is that you chat in your questions using the chat box functionality, which can be found on the right-hand side of your screen. We are going to save time at the end for questions. So feel free to chat in your questions throughout the entire webinar. My colleague Kevin and I are working on the back end, and we'll be collecting all of your questions and make sure they're available to both Fern and Ro at the end of the webinar so that we can answer them all together. The other thing I wanted to say today is that today's webinar is being recorded, and the recording, along with the slides, are going to be posted to the MCTAC and CTAC website, so you'll be able to find them there and share with your colleagues and staff if you're interested in doing so. Also, as I mentioned before, this is our third webinar in our series. Our next webinar is coming up with our colleague David Wozniak. It's going to be on April 15th, and the topic will be quality, documentation, and compliance. And then the final component of our webinar series is going to be in office hours. And for those of you who might not be familiar, office hours is kind of like our way of opening up the lines. And for folks who have joined any of the webinars and might have additional questions, we're inviting you to join us on April 30th to ask your questions of both Fern and Ro and David Wozniak. So it's an opportunity to ask our wonderful colleagues and experts any questions that may have popped up about, any of the topics that we review on this, this webinar series. And before I turn it over to our wonderful presenters for the day, I just really wanted to thank everyone for joining. We're experiencing and living day to day in very uncertain times, and we appreciate that you're taking time out to join us today for this webinar. Finance and billing are incredibly important in maintaining good practices and making sure our organizations and agencies operate. I think what we're going to try and frame today are billing and finance best practices that exist no matter what condition or environment we're experiencing, and just really how to establish these best processes in a consistent way is is really important for us to recognize, and that even in moments of crisis, if you have good processes established, these can be adjusted appropriately. So we understand that what we're all experiencing right now is truly unprecedented, and we are mindful of that, and just hope that you're able to take something from today's presentation and apply it to your organization or agency. And if you come up with questions, please do ask them. We will do our best to answer them towards the end of the presentation. So with that, I'm going to ask Fern and then Ro to take it over and introduce themselves. So thank you.
Thank you, Meg. I'm Fern Zager, as you heard. I'm the owner and principal consultant of Fern Zager Consulting, and that's just after over 45 years of experience in behavioral health and related fields, including FQHCs, community organizations, mental health clinics, even worked at Creedmoor at one point in South Beach Psychiatric Center. So I've been around. Just prior to starting my own consulting firm, I was the CEO at Staten Island Mental Health Society. The society, as many of you may know, is a it's the go-to agency on Staten Island for children and families, serving about 6,000 kids and their families throughout the borough in 21 sites, 27 programs. It has been around since 1895. I helped facilitate a successful merger into the local hospital where all staff retained their jobs and all programs were continued, and we actually grew, which was not an easy feat. But I think more to the point, and I'm really following up on what Meg has just said, we are in uncharted waters now as a result of the pandemic. And we're in a position where we have to be making different kinds of decisions moving forward. Now, we had that experience after Hurricane Sandy, where we had to it required quick actions, snap-on-the-ground decisions, and the need to stabilize our agencies and the community during extraordinarily difficult and stressful times. And that's where we're going now. And among the lessons learned is how important it is to establish routines. So in talking about finance and billing, you might say, we've got so many other things to do. How can we pay attention to those routine structures and operations? And I would argue that this is exactly the time that we need to be focusing on this. We need to be establishing routines. We need to be establishing structure. We have to take control over those things that we can take control over. We can't control the virus. We can't control what is happening at the federal level, even the state or local, the decisions that they're making. We could try to influence it, but we can't control it. But there are things that we can control. And among those, in terms of all of our operations, our business operations, it includes our fiscal operations, and it's even more important. It's always important, but there will be dollars available towards expenses that are related to the COVID virus and how people are responding. And your billing apparatus, your billing structures have to be able to capture all of your expenses that are directly related to your pandemic response, because you may be able to get reimbursed and you may be able to apply for additional grants. So you need to know where your monies are spent, how you're delivering services. You have to be able to capture all of that. And that's what we're going to be doing today. I just want to, if we can go to the first slide, Ro. Okay, this is the agenda for today. I'm not going to read it all. I just went over, I'm going to just give you a quick review of sessions 1 and 2, and then we're going to launch into the actual presentation. Next. Okay, so in the first session, it was an introduction to business practices. We talked about the role of leadership, how important it is to agency culture and values to establish and maintain it. We spoke about the importance and the responsibility for effective communication with agency stakeholders, and we have an expanded definition of stakeholders. It includes not only your staff, your leadership, your board, but also the community at large. There are many entities, your funders, your licensing agents, your legislators, your local publicity, all need to know at one level or another what your business plans are. We talked about strategic planning that couples business planning, and we suggested that you use a tracer methodology to be able to look at your workflow. And the tracer methodology is used by JCO and by OMH, OASIS. It's a very good tool to be able to look at how your clients are receiving services and whether there are any gaps. So we spoke about that. Next. In the second session, David Wozniak spoke about the importance of information technology and data, and he emphasized that the right data is an asset. It's essential for competitive advantage and strategic success. Information technology stores, retrieves, and manipulates data. The right hardware and software are crucial. So you have to have the right EHR, financial accounting. All the pieces are important, and they're all interact with one another, so you have to look at the whole picture. They must tie into the organization's mission, goals, and business and strategic plans. And ultimately, it's important to create a data-informed organization. So with that in mind, I'm going to turn this over to Ro Belfini, who's going to introduce herself and speak in much more detail about actual business operations, your fiscal operations. Ro?
Hi, thank you, Fern. My name is Rosemary Belfini. I was formerly the Chief Administrative Officer at Staten Island Mental Health Society, and when the society merged with RUMC, for a while I was the controller of the areas or the programs that did merge into RUMC. Today I'm going to review what the components of financial management are. Now, most of these, practically all of these factors can have their own webinar in detail, but I'm going to be giving you an overview of each area. And again, as everyone has indicated, the importance of having control over what you are doing is vital to getting through this pandemic, and also to fortify yourselves and ask for the right amount of money if you do need assistance. You're going to need to know all this information. You're going to need to know it now, more importantly than ever before. Okay, so what I'm going to be reviewing is financial planning, budget process, unit cost, revenue cycle, insurance contracts, billing, key performance indicators, accounting systems, payroll, accounts receivable, payable, purchasing, fixed assets, grants management, and reporting. So let's begin. Financial planning. It is the process that identifies and implements your business strategic plan. Financial plans usually cover 3 to 5 years period and should ultimately determine if your plan is viable. Financial planning is a fundamental part of any business or strategic plan, but it does not stand alone. It is giving you a story of what means you need to get to your plan. So it gives you details of how you are going to attempt to meet your objectives, your strategic objectives. How are you going to arrive at that? The budget process is a system for developing and approving and managing a budget. The development of a budget cannot be done in a vacuum. Your managers, your key staff need to be a part of that budget. You cannot do it in a vacuum because they're the ones that know if this budget is operational, if you can do those services and the amount of revenue you're estimating you're going to make. You need to have this information in order to essentially calculate your unit cost as well. Everyone needs to have a stake in what is happening. What is unit cost? Okay, unit cost can simply be what it costs you to provide one service. In order to calculate your cost, you need to know what your cost, your unit cost. You need to know what your fixed costs are, your direct labor costs, your material direct labor costs. These are called the direct labor costs and material direct labor costs are also considered variable costs because they can change. And unit cost is very important. Here's an example of a unit cost analysis. On the left side, you have your monthly cost. This is your clinical salary for that 1 month, your fringe benefits for that 1 month, your equipment and supplies, and then your fixed costs, management in general. What are the salaries? What are the administrative salaries? Okay, so if you have a total monthly cost for a program or for one social worker within a program, okay, if your total cost is $12,915, if you take one social worker, you have to take into account what is that one social worker doing in a given month? Is that social worker totally working day-to-day? You have to take into consideration their vacation time. You have to take into consideration their sick time, their holidays. So you come out to actually the number of services a social worker can provide in a given day. Okay, and if you take that the average number of days in a month, you calculate, and you also have to calculate for any missed appointments. So you come up with a unit cost that says $139 per service. Now, if you think about it, if one social worker and one service costs $139, okay, and you get paid $140, you have a spread, or you have the amount of money that you can make in a given service, okay? This is an estimate, okay? What actually happens, then you have to take that into account, and you're comparing the two. Why is it so important? Like I said, this is your benchmark for comparison. If this is what I think I should be making, what is the actual social worker productivity? Okay, if a social worker is only doing 4 services in a day, then there's a problem. Or what is the problem? Is it a cyclical problem? Was the person out? Was the person on vacation? You see, these are the things that have to also build in to your analysis, to your profit margin. What happens if you would add a social worker? You know, as I said, fixed costs stay fixed. At some point, you don't need to add, like if you were to add 2 social workers to a given program, you wouldn't need to add a manager. There's a certain point you would need to add a manager because there should be certain guidelines that you know of that say, okay, one supervisor can manage 4 social workers. Once you arrive at that, what is the maximum amount, you can then really formulate what you need to do and how you need to move the program so that you're making the maximum amount you possibly can in an ethical way. Are there services out there that need to be filled? Do you have a waiting list? These are all questions that you're going to be asking yourself as you review what your unit costs are, okay? This can also tell you, you know, is the social worker meeting their productivity levels? What should their productivity levels are? What should they be? Do you have a 35-hour work week, or do you have a 37.5-hour work week? This all feeds into that process, into that analysis of unit cost. Okay, now we're going into the revenue cycle. Okay, what is a revenue cycle? Now, it's a fancy name for things that have been done all along, okay? But now, because we've analyzed what parts of the unit's revenue cycle are important, we've named it revenue cycle. So revenue cycle management is the financial process where an organization manage the administrative and clinical functions associated with processing, payment, and revenue generation. The process encompasses the identification, management, and collection of client service revenue. The revenue cycle includes 2 components, front end and back end. The front end manages the client-facing aspects, whereas the back end handles the claims management and reimbursement. Each component includes its own department, staff, and policies to drive revenue through the cycle. Electronic health record systems have helped to streamline and provide more accuracy to healthcare revenue cycle management strategies. Many organizations use technology to track claims throughout their life cycle, collect payments, and address claim denials. Ultimately, these technologies facilitate a steady stream of revenue. Each section of a revenue cycle is vital, and especially now, you need to know where you stand with the services you're giving, with what payments you're receiving. People need to pay attention to your charge master, and this is a revenue cycle and that visual of what happens. Revenue cycle starts when you are scheduling an individual for a service. Is that individual pre-authorized to have this service? If they have Medicaid, yes. If they're eligible, if they have commercial insurance, you have to determine, or your front end has to determine, if that person is eligible. Do they need a prerequisite or pre-authorization? Do you have that pre-authorization? Because if you don't have that pre-authorization, you're not going to get paid, okay? And we need to get paid for the services we provide, okay? It is a good practice to have appointment reminders, okay? Nowadays, people get texts, they get emails, they get phone calls. Any means of trying to make sure that person attends that appointment, because that missed appointment, you're paying that individual for a service that is not existent, okay? So you need to do anything and everything possible to make sure a client is aware that they have an appointment. Nowadays, if it's not an appointment in person, obviously, it'll be appointment using technology. But you need to try to keep appointments and keep your missed appointments or no-show rates down. Registration and eligibility. When that individual comes in, normally would come in, you need to make sure that that person is, again, eligible to receive this service. And if not, you need to notify the clinician or notify the person that's providing the service. Is there a fee to collect? Is there a copay? If they have commercial insurance, 9 times out of 10, there should be a copay that's collectible. And the process goes into charge capture, clinical documentation, and coding. Do we have the right diagnosis for that client? Do we have, is the documentation there so that we can bill or we're allowed to bill? This is important, because you shouldn't really be receiving any payments unless the documentation is in. We've implemented internal audits of all our documentation at Staten Island Mental Health, which improved a lot of billing going out and coming back, being paid. Your charge master. Your charge master is critical now. Things are changing. You're going to be able to charge for different methods of providing services. You need to be aware of all those different methods. Every day is changing, and that charge master is vital. And then checkout. That person has received the service. Okay, so we've dropped the bill. Okay, so now we need to make sure that bill has been submitted, and we're tracking the posting of that bill and that payment. And part of this is understanding what contracts we have. What is the expected return, payment return for that service? We need to be aware of all those factors. We need to track our accounts receivable to make sure that we are collecting. What is our denial rate? What is our, denial management? Are we following up on denials we are aware of? And this is all vital to the revenue cycle and you receiving the payments you need to receive. Okay, so the billing process, we just went through this. Client registration, confirm financial responsibility. Client check-in, out, preparing claims, transmitting claims, monitor adjudication, generate a client bill. Client statements are only for commercial insurance. If a client has Medicaid, there should be no client responsibility. Follow up on client payments and collections. Managed care and other insurance contracts. Okay, so payer contracts define and explain a provider's reimbursement arrangement for delivering service to clients covered by specific health plans. The contract covers everything from reimbursement rates and provider networks to medical necessity and provider credentialing. These are all important factors that you need to know about every insurance contract you have. You need to know what your fee schedule is going to be. You need to understand what they require in terms of credentialing. You need to make sure that it's medically necessary to provide this service. You need to understand all of these factors. What type of pre-authorization you may need. Managing insurance contracts is vital to supporting your revenue cycle. Understanding and communicating the following which is what I just reviewed: payment rate, service fee per service. What is required to ensure timely reimbursement? What kind of information are they expecting on their claims, and so on and so forth. Another part of the revenue cycle, and this is really, really important to a lot of agencies, is what are key performance indicators? These are values that are important to demonstrate how you're doing, how your organization is doing. How are we getting, how are we doing with receiving cash in, okay? What's the amount of time it takes for you to get paid? If you're billing on a daily basis, does it take 3 days? Does it take a week? If you're billing on a weekly basis or a monthly basis, what is the lag time for you to get paid? The point of service collection rate. So this is the rate of how you're collecting based on what you've billed out. Days in receivable outstanding. Denial resolve rate. How many denials do you receive, and how many of those denials do you actually resolve? Okay, and what is it costing you to do this? How much is it costing the agency to collect on denial? Are we doing a good job at it? How are KPIs used? Okay, patient eligibility and required authorization have lost revenue due to desk and front-end processes. This is what I was talking about when I was reviewing the revenue cycle chart. Okay, when the patient first comes in, your front desk is your first part of your revenue cycle. Okay, they need to know what needs to be done. It is important that they have that they get an authorization, that they know that their insurance is viable, that it's current. If they have Medicaid, that Medicaid is eligible for receiving services. Because if they're not eligible, you will not get paid, and that's why it is vital for people to know. And now in this day and age, if you know you're doing tele services, then there needs to be a process in place that, again, checks the client's insurance. I know it's probably going to be a little lax and easy, but it's better to make sure that some staff is looking at the client eligibility. You still need a schedule. It's much more important to do it now than ever before. Cancellation and no-show rates can be detrimental to healthcare providers. Without the cancellation or no-show reason, your practice cannot pinpoint the root causes of the lost revenue. Does your scheduling system have the capacity to note why appointments are being canceled? In some cases, you really need to really dive in and see why a client is not showing up. And if that client doesn't show up habitually, then you need to change that person. You need to give them a different appointment. They shouldn't have that same appointment. You need people to come in when they're supposed to come in. Are your no-show rates are your no-shows those appointments that have a history of not showing? Again, what I just said. Billing lag time can lead to money loss. Lost charges can be a result of lagging documentation and billing. Again, is so important that the documentation be there and be correct. We found at Staten Island Mental Health that having one person review billing has been extremely helpful. Our billing rates were, 90%, 95% collection. And the issues that are found, you can actually discuss. You should have like a billing committee or a meeting so that whatever problems you have, you can discuss and resolve and go through the process and see what kind of errors the auditor is finding, what kind of issues you're having with insurance companies. Communication is key in all of this. You really should have some kind of billing or revenue cycle committee with all managers involved, and from the front end to the financial back end. Everyone who's a key player in this cycle needs to be involved and needs to hear what is happening throughout the process. What problems? Let's discuss them. Let's try to resolve them. How are we improving on them? Insurance denial percentages. I mean, if you see a process where you're seeing your denials and there's a problem with the denial, a problem that you see throughout, then maybe you need to provide, an educational program on resolving what that problem is. For example, if they're putting a different code in that's not valid, maybe there needs to be a re-education of a certain process so that clinicians or, front desk individuals, staff, know what they're doing incorrectly and can resolve the problem going forward. Accounts receivable should be within 30 days. Yes, that's the best thing. But if you have a new contract, if you have a new insurance contract, you're expecting to see more denials with any kind of new contract because you're starting up. You don't know what, even with testing, you don't know exactly how the format should be, and you need to iron out any kind of kinks that you have to that process. Okay, now we're going into the more traditional accounting process, the accounting system. It is really a system, a general ledger system that operates with a chart of accounts that matches your revenue and expenses and funding source, by funding source, organization units, and multiple sites. The payroll. Payroll is the operation of compensating your employees. It includes controls on hiring, firing, and salary adjustment. Payroll requires documentation on time and effort. Everyone needs to know, what time is being put in for what program. This is more important now than ever. You need to track what people are doing from home. You need to make sure that, they're putting in the time, and you need to track it so that you can support yourselves in terms of getting funding in to support those individuals, because there's going to be a lot less services now or a lot more services, but you need to get paid for them. And you need to track what people are doing. Payroll accounts for employee time off, employees withholding taxes, and employers' taxes. These are things that traditionally your payroll person, coordinator, supervisor, manager would be doing. These are things that are vital so that everyone gets paid and everyone knows where they stand in terms of time off, in terms of, taxes, and so on and so forth. Accounts receivable. We've talked a lot about this already. Accounts receivable is a series of GL accounts used to manage amounts owed to to organizations by its clients, funders, and grantors. The accounts receivable process includes billing to third-party payers such as Medicaid, Medicare, and commercial insurances. This is part of the back end of your revenue cycle. But if you, accounts receivable can be many things, not just that. It can be, accounts receivable can be, you know, a grant that you have that you know, pays on a, you know, a claim process. So you're about to receive monies from a funder, okay? You can have a receivable because you provided the service, but you haven't been paid for it. So you need to track all of this information. And it is important to part of your KPI measurement of your revenue cycle, as I've said before. Accounts payable, the GL accounts, managing the amounts paid out to organization and vendors for accounts payable. Accounts payable usually requires approval of purchase orders or employee travel, reimbursement, and the co-signing of checks. Accounts payable is a big deal for agencies. There are certain accounts payable, there's certain purchases that need certain levels of signature. If you're spending $5 or $500, it may need a management approval. But if you're spending $5,000, you may need a VP's approval. That needs to all be documented for yourselves in terms of what areas or what amounts need to be documented and validated and signed off on. This is a process that needs to be established as part of your procedures throughout the agency. Purchasing and fixed assets. Purchasing, the process that controls the buying and accounting of assets or equipment. Periodic inventory of assets should be performed. How many things are you purchasing? If you're purchasing huge equipment, you need to know when you purchased it, what was the cost of it. You need to actually depreciate it over a long a period of time that's considered GAAP effective. And you need to track your depreciation of all your assets. Financial reporting. Your general ledger system should be able to generate, you know, some reports that you need in order to see what your net worth is, what your monetary activity is. The most helpful reports are your statement of financial activity and your cash flow and your balance sheet. The balance sheet shows an organization's assets, liabilities, and net assets. The statement of financial activity shows the nonprofit organization income and expenses for a specific period of time. The cash flow report provides aggregate data regarding all cash inflows an organization receives from its outgoing operations and external investment sources. It also includes all cash flows that pay for our business activity and investments during a period. How is your money being used? This is what a cash flow report tells you. How much is being used for operation? How much is being used for your investments? Your capital expenditures. This all goes into your cash flow. You need to understand how your money is being used. Here's an example of a balance sheet. As you can see, your assets, cash and cash equivalent, investments, accounts receivable, contributions, grants receivable, prepaid expenses. Non-current assets are your equipment, your fixed assets. Liabilities and net assets. Your liabilities, what do you need to pay to vendors? Your accrued expenses, your payroll withholding. Net assets, what monies have you used for all the work you've done? Temporary restricted. These are funds that you cannot utilize. They have some kind of restriction temporarily. Unrestricted is what you're using for operations. Unrestricted board designated, these are board designated funds. Here's a sample of a statement of financial activity. Obviously, the first is your revenue. These are your, it shows you your budget, it shows you your actual, and it shows you a variance. This should be done on a monthly basis and should be reviewed with program managers so that they know where they stand in terms of their budget and what they've actually done in terms of revenue. This should be coupled with what you know in terms of productivity. How does productivity relate to this? This is what should be discussed on a monthly basis with all program managers. This is a statement of cash flow. Again, this shows you exactly how your funds are being used. These are your funds for your operations. What activity have we had? You know, you have monies coming in, you have monies going out. This designates how much investing activities you're doing, you know, how much it costs you to finance. This is what you started with, and it also tells you what your cash and cash equivalent at the beginning of the year and at the end of the year. So this is on a month. This can be done on a monthly basis, or it can be done on a month or an annual basis. It's an ongoing type of report. Okay, program grants management. Grant management ensures compliance with requirements of grants and contracts. Usually the grant or contract specifies expenditures and line item controls, performance measures, deliverables, and reporting requirements. Ongoing communication, again, with management and staff is the best approach to meet grant goals and requirements. Again, these are things you need to involve program managers with and staff with. There are, in a specific grant, they may require you to have a certain level of clinicians or service providers. They want a certain level of service, number of services. They want to know what is, you know, they may have a guideline of what is acceptable as an expenditure. And you need to know, this is what they've said that we can spend. This is what we proposed we would spend. This is what we actually did. You need to meet with people and communicate. Managers with communication is vital to responding to these grants, because those funders want to know how you're doing, how you're spending their money. So this is a vital process, and it needs to be communicated. I can't say it enough. You need to know, you need to understand, your finance people need to understand that they need to give this information. They need to be part of that program manager's understanding, explanation of what needs to be done to meet grant goals. There needs to be constant communication. What are internal controls? Okay, so internal controls are the policies and procedures implemented that safeguard the assets of the agency, mitigate risk and fraud. This is commonly known as checks and balances. Segregation of duties. In a fiscal department, you can't have a person who is doing payroll actually or reconciling the bank account for payroll. You shouldn't have that. There should be another person who actually is doing it and reconciling it, so that there is a segregation of duties. They're processing, one person is processing payroll, another person is reconciling payroll to the general ledger and to the bank account. Authorization of agency transactions. I touched upon this. You need to have a certain tier of responsibility or sign off on certain requests, purchase requests. Okay, and it should be logical. It shouldn't. You don't want to over encumber management with so much. So if it's a $50 request, as long as it's budgeted and you're available, it's available to that program, it can just go with the management's approval. But if you're doing a $5,000 request, maybe it needs senior management approval. It's depending on your organization. You need to determine what those guidelines are. Maintaining documentation and records. This is vital. Documentation is a vital part of finance. We need to have documentation of all purchases. We need to have documentation of all cash receipts. You need to understand that it's not, the fiscal department is not just asking for this information because, you know, they don't, you know, they want to be difficult. They're asking for this information because it's vital. It's vital to getting paid for what you're entitled to, okay? It's a great idea to have internal audit. You would rather have internal audits come up with an issue and resolve the issue before someone else comes in and says there's an issue. Obviously, you don't want regulators to find the issue. You want you yourself to see problems and resolve the problem before it gets to someone else finding it or a regulator finding it. Effective internal controls and internal audits reduce the risk of finding fraud, waste, and abuse when undergoing regulatory audits. No one feels comfortable when Omega is coming to knock on your door. But if you have done the work that needs to be done, it goes easier. Who needs to know the financial plan? Executive leadership, all agency departments, program managers, supervisor, contract managers, fiscal staff, HR, IT, and compliance staff. The more information you provide, the more people are invested in your strategic goals, and they're invested in your mission. And in order to get them invested in your mission, you have to make them part of your mission. And communicating to them is vital to that. If you have a front-end staff, they need to know how important they are to the revenue cycle. They're not just meeting clients. They're meeting clients, but they have probably the most important part of getting that client in the door correct and having them correctly processed through their system so that you can get paid. They are a vital part of that agency for you and a vital part of that revenue cycle. Board members need to be involved with your financial plan. Grantors, regulators, legislators, and local government. I mean, regulators and grantors, they want to know what your financial plan is. You have to have a good financial plan, otherwise you're not going to get the grant, right? So they need to know you need to be invested. They need to know you're invested in it, and they need to know that you know how to put this plan into operation. In-house or outsourcing accounting function. It's not only the accounting function, it is the billing function. These groups and these departments are expensive to run. Everyone knows that, and you really need to sit down and really analyze what you need in order to support your agency. So is it better to outsource or to do in-house? It's important to look at it from a very first a financial standpoint. Can they do it? Can an outsourcing company do it better? How much information are they going to be able to provide to you so that you have what you need, your needs are? But again, this is either way, it has to meet what your needs are. There's no right and wrong. There's really pros and cons, but again, it needs to meet your needs for your agency. It might be that you want to just outsource one function, like the billing function, or you want to outsource the financial function and keep the billings function in-house. You need to really think it through and see what's best for your agency. Okay, in summary, today we've reviewed the significance of financial planning and its connection to your business and strategic plans, the budgeting process and why management and staff should be involved, how unit costs can be used as a benchmark to determine profitability, components of the revenue cycle, how KPIs can demonstrate if you are meeting organizational objectives, accounting systems and functions, financial reporting, and the overall importance of communicating with your managers and staff. So I think now that we're open for questions.
Thank you so much, Ro, for walking us through all of that. This is Meg from MCTAC again, and I want to just welcome folks who may have not chatted in their questions to please do so at this time, because we will be taking questions right now and kind of reviewing things. I did want to point out just two quick things. This webinar, we are not going to be addressing any of the updated OMH or OASIS guidance that's come out related to COVID-19. That's really not what the purpose of today's webinar is. So if you do have questions about that, I just wanted to warn you, we're not going to be able to address those on today's webinar. This is not a state policy webinar. And I would encourage you to visit the OMH and OASIS guidance pages that have been set up with further resources and information. So I know that's probably percolating in your minds. You've probably got some policy related questions, but I just wanted to frame as you chat in your questions that we won't be able to address those on today's webinar, and that you should direct your questions on policy matters directly to the appropriate state office. The other thing to say is that we are going to be sharing both the recording of today's webinar as well as the slides. And we'll be sharing those as soon as our WebEx platform allows us to download this recording, so hopefully within the next few days. And also, as you chat in your questions, just a gentle reminder that we do have another webinar offering coming up in this series, and that'll be in 2 weeks with David Wozniak, and that topic will be quality, compliance, and documentation. And then the final piece is just to say the final component of this webinar series is going to be 2 weeks after that. It'll actually be on April 30th, where we have our office hours, in which we will invite Ro and Fern and David back, and we will invite all of you to join us. And if you've had any questions from any of the webinars related to kind of business best practices, we invite you to bring them, and we will have all of our wonderful experts on the line, and we'll be able to address the questions then. So if you have any questions about that, we'd recommend that you visit the MCTAC and CTAC website for further registration and additional details and info about the webinar in 2 weeks on quality, compliance, and documentation, and the office hours 2 weeks after that, and registration and how to do so. So with that, I'm just going to pause for a moment and give you all a chance to chat in your questions. Fern and Ro, did you want to say anything else as we wait for some questions to come in?
Hi, this is Fern. Can you hear me?
Yes, we can, Fern. Thank you.
Oh, great. Okay. Thank you. You know, as I was listening to Ro, and she and I have worked together for so many years, it's been a natural process where, you know, as a CEO, it was so important for me to understand the fiscal and administrative operations of the agency, and it's not held separately. So all of the things that Ro was sharing today and showing us, and some of the tools that she showed, I had to be very familiar with. It's not that I had to know how to put it together myself, but as a CEO, I had to clearly understand that and be able to use the information to help with my own decision making and to help with growing the capacity of the agency, or under difficult times, as you know, as I said earlier, we moved into a merger situation. Well, I had to understand what our fiscal circumstances were. You cannot separate, and Ro has said that, you cannot separate fiscal administrative operations from delivery of program services and the overall operation of your agency. The other point that I wanted to make that's relevant to that is that there are some leaders, and this is leadership style. We talked about that during the first podcast. There are many different styles. Each leader has their own style. They set their own culture. But in some cases, my predecessor, for instance, felt that the business of the agency was not something that was necessary for the on-the-ground providers to know about. The feeling of some leaders is that we'll take care of the business and the money, you take care of providing the quality services. I have found that people have better buy-in and better allegiance to what's happening and will stick with you during tough times, and believe me, we've been through many tough times, now being one of them with the coronavirus. The more people know, the more they feel valued, that they are important in the decision-making process, the more they understand, the better cooperation and support that you get. So I just wanted to
Thank
really
you, Fern.
in on that.
That's super helpful. We have a couple questions. I think we'll get to one. The rest of them, I just will say we will try and address during our office hours that are coming up. So the question, and if we get to more, fabulous, but here's our first one. So the question is outsourcing for accounting services recommended for an agency with certain amounts of staff members? And in particular, I think this person is looking for if you would recommend outsourcing for a small agency with between 5 and 10 workers.
I don't know if we can make a recommendation. They have to feel that they cannot support having an in-house fiscal department or business department. It depends on what their strategic plan holds for. What is the intent of their strategic plan? Can they support a fiscal department and a billing department? It depends on what you can support. I mean, you lose control. I can say you lose control of what's happening on an ongoing or spur of the moment basis if you are outsourced. But then again, if you cannot afford a good fiscal department, which holds, the segregation of duties true and so on and so forth, then you really need to look at the option and investigate how much will they charge you to provide the financial backup that you're going to need or looking for. Make that decision based on that. They have to weigh both.
Yeah, I think I can add.
Yep. Go ahead. Go right ahead.
I can add just a little bit to that. I think by and large, the more that you can manage in-house, the better it is, because you have greater control and you're able to really focus on the information, ask questions, and it becomes much more integrated. But that's not a reality for everybody. So as Rohit said, not every entity can afford it. And even if you do, even if you can afford to put together your own fiscal department, you might not be able to manage all of the operations. And so you can really triage and segregate and determine what operations you can manage internally and what you can manage, what you would need some external help for. That if you can do that with an eye towards making you stronger and better, that's really the best approach. And the other point that I wanted to make is that all of us now in our new world are having to relook at our operations, our business operations, our practices, our fiscal operations, our billing, reporting, recording. In this day of the pandemic, we've had to pivot. We've had to work differently. Well, some of the changes that you're making now may be changes that you want to maintain after this is over. Maybe you're seeing that you have better compliance from your clients, that there are fewer, and this is what I'm hearing actually, that there are fewer broken appointments. So these are things to consider as well, but you need to be able to collect all of that information, particularly if we want to be in a position later on to advocate for retaining some of these changes in regulations because they're helpful to our operations and our clients. Those are some of the thoughts that I had.
I appreciate those thoughts, Fern, and also yours as well, Ro. I'm just mindful of time at the moment, and we are after the 2 o'clock hour somehow already. So unfortunately, I don't think we're going to be able to get to any of the other questions today. But for those of you who chatted in your questions, please know that MCTAC and CTAC have collected them. and we will be keeping hold of them for the office hours. So we'll circle back in 4 weeks from now during our office hours with any of those questions we've received that we were not able to address today. So I just want to thank Fern and Ro for sharing their expertise around finance and billing, and thank all of you for joining us, and also thank my colleague Kevin, who is the back-end wizard on WebEx today as our host, collecting all the questions and making sure the project ran smoothly. So thank you all for joining us. I hope you all stay healthy and well, and take good care.
Thank you. Thank you.
Thanks.